Good morning, everyone. This is Charalambos Pissouros, Senior Analyst at IronFX Global, bringing you the morning comment for the 16th of March. Today, all the lights will fall on the FOMC, which gathers to decide on its monetary policy. Investors are all but certain that the Fed will refrain from changing its interest rate at this meeting, so the focus will shift to the updated dot plot, the new economic forecasts, and to the press conference held by Chair Yellen following the meeting. The December dots showed that the committee saw 4 hikes in 2016, while the market priced in only 2 back then. Since then, market expectations have fallen significantly, and now they point to a single hike this year. Global financial volatility intensified since December, and a plethora of Fed speakers signaled their hesitation to continue with the normalization process given this uncertainty. Taking into account these remarks, we believe that the dot plot is likely to be revised down today. However, we expect a modest revision, which will convey that the bumpy start of the year has delayed the Fed's plans but not derailed them. The labor market remains resilient, and inflation, both CPI and core PCE, exceeded expectations in January, which supports the case that the FOMC is possible to use this meeting as a stepping stone to prepare investors for further hikes. Therefore, we expect the initial reaction in the dollar to depend on the magnitude of the committee's revisions, while the subsequent response may come during Chair Yellen's press conference, driven by any signals she sends with regards to the imminent meetings. Overnight, Bank of Japan Governor Kuroda stated that the bank could cut interest rates to minus 0.5% if needed, addressing concerns that policymakers may be running out of policy ammunition. The governor also said that negative rates normally work to weaken a country's currency, but the Bank of Japan is not targeting the exchange rate. The yen weakened against its major counterparts on these comments, as concerns regarding the bank's capability to ease further may have receded somewhat. We maintain the view that the yen is currently more linked to the global risk sentiment rather than changes in monetary policy, and as a result, the near-term direction of the currency may depend on any shifts in this sentiment. As for the indicators today, Norway's trade balance for February is due to be released, but no forecast is available. From the UK, we get the employment report for January. The unemployment rate is expected to have remained unchanged, while average weekly earnings are forecast to have accelerated somewhat. The services PMI for the same month showed that one of the few positive contributions to prices came from salaries, which supports somewhat the forecast. As a result, accelerating earnings could cause the pound to reverse some of Tuesday's losses. However, I believe that the outlook of the pound remains negative, and I would treat any possible advances as a corrective move. The UK government budget for 2016 is also due to be announced, and expectations are for a balanced budget. We believe that government officials may be concerned about the possibility of the UK leaving the European Union and refrain from making any substantial changes to the budget. In the US, the indicator that could attract some attention ahead of the FOMC decision is the CPI for February. Expectations are for a considerable slowdown following January's sharp rise. The headline rate jumped much higher than the core rate in January, which suggests that a large part of the acceleration may have been due to energy-related base effects rather than an actual rise in the underlying inflation trend. Anyhow, a slowdown following such an astonishing speed-up appears more than normal to us, and therefore we expect any reaction in the greenback to be short-lived, especially as the Fed decision will be available a few hours later. US housing starts are forecast to have increased in February, while the more forward-looking building permits for the same month are expected to have declined marginally. Industrial production for February is forecast to have resumed its downtrend after rising in January. The forecast is supported by the ISM manufacturing PMI for the same month, which remained below 50. Besides Fed Chair Yellen, we have no other speakers today. For more information, including technical analysis, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX Global, wishing you solid trading.